So in this video, I'm basically going to break down the way I have my chart set up. So this is what TradingView, a clean TradingView chart looks like. The primary things I use are some of the key moving averages, 9 EMA, 20 EMA, 50 EMA, 200 EMA, along with VWAP. And I use them in a particular way where I only use them when there's a trend. If there's no trend, I don't use them. So essentially, this is how I have my EMA set up. So I have the 9 EMA set up like this. I have the 50 EMA, that's going to be yellow, right? The reason why I have my 9 EMA as green is because green signifies the fastest, so it's green. Yellow is the 20 EMA, that's yellow, that's a little slower. 50 EMA is red, that's of course significantly slower, and then white is at 200. Right after that, I have the PO3 that I like to use. So a lot of you guys ask me about what this PO3 is. This is essentially, it gives you a higher time frame picture of what the candle looks like on any time frame you desire. So if I'm trading for instance, if I'm trading the 5 minute, so if I'm trading the 1 minute, right, this is the 1 minute time frame here, and I want to look at what the 5 minute candle looks like, or the 15 minute candle looks like, without flipping over, I can switch this to whatever time frame I want. So I can go to 5 minutes and then switch it over. Right, I can go to 1 hour if I want. Kind of gives me the hourly picture. I can kind of go over to 4 hours to give me that larger picture. What I like to do is I like to have this on the daily. The reason why I like to have this on the daily when I'm trading is because it gives me an idea of who's in control. It gives me a visual picture of who's in control, and it reminds me not to get too caught up in what I'm seeing. Right, the 1 minute candles, they are hard to kind of read. It takes some getting used to, but that's the one I do prefer. After that, I have something called the Strat helper. So if you guys are not familiar with the Strat is a methodology in analyzing candlestick combinations. So essentially what the Strat says is there's basically 3 things price can do, right? There's 3 things price can do. One thing is, say this is the previous candle, right? So say this is the previous candle. This is going to tie into how I use the indicator. Say this is a previous candle, and say this is a bullish candle. So when we have a new candle forming, there's 3 things this new candle can do, right? One, it can stay inside, meaning it can stay inside the range of the previous candle. That's referred to as a 1 inside candle. Another thing it can do is it can take out the high of this candle. That would be referred to as a 2 up because it took out the upside, or it can take out that low, and that would be a 2 down. It will take out that the downside of that candle. So when a new candle forms, there's only 3 things you can potentially do. And the primary thing I pay attention to is to see if I can get buy blocks and sell blocks. So essentially an engulfing candle, right? It's a little different than engulfing candle because engulfing candle, sometimes they include the wicks, right? Or sometimes they include the body, however you want to kind of interpret it. But I like the buy blocks and sell blocks. That's where I generate them from, because of the 3 ups or the 3 downs. So what that means is it takes out the entire range of the previous candle. So that indicator right there is called the Strat helper. The Strat helper right here allows me to identify what type of candles are forming and allows me to use the combinations. So I don't use all the Strat combinations. I don't need to put all these things on because I already know how to identify it just by paying attention to price long enough. I can already identify what's going on. But this is another very cool indicator, and I use it just to show me or to highlight areas on the chart where there's buyers in control or a significant amount of buyers step up, significant amount of sellers step in. Doesn't mean that something is going to happen at that point. No. What I like to do is I like to align these candles along with key levels. So notice how all these moving averages kind of tie into one another, and I use them accordingly. So if there is a trend, say, let's see if we can go back to a trending day here, right? See if I can cherry pick a trending day. Okay, here. Okay, we're gonna cherry pick this right here. Okay. So you can kind of see how the moving averages are crisscrossing. There's no clear trend. So once the moving averages start crossing back up, and think of it like a fan. Once they start fanning out and there's separation between them, that tells you there's a trend forming, or we're currently in a trend. So the wider those moving averages are, the stronger the trend. The closer they are, the weaker the trend. So in both directions. So in this case, if I'm seeing price move like this, I'm throwing moving averages on the chart. And what I'm probably going to do is look for some key levels, right? I already have my key levels that I generate every single day, along with some key zones I can probably look for intraday and see if those moving averages line up with those key zones or those key levels, and then use the moving averages as another area of confluence to take the trade. So for instance, you can kind of see these highs up here, rather than just taking the moving averages in a vacuum, right? So you can kind of see here, we're trending, we're above all those moving averages, we continue to push higher, don't know where to get in, okay, we're coming back into that zone, the moving average kind of supports it, and my favorite moving average is actually the 50, right? 50 is my favorite. Comes back into the 50, remember the red is the 50, and then it bounces off it. Again, we're cherry picking in this case, but I'm just kind of showing you how I approach it. If there is no trend, the moving averages are just noise. All right, they're just actually going to do more harm than good, right? So think of it like that. So if you see a clear trend, throw the moving averages on. No trend, stick to price action. Probably going to be range bound, classic support resistance. So that's pretty much all the indicators I use. I also sometimes like to add the ATR, right? ATR, I love the ATR. The reason why I like the ATR is because it tells me how do I adjust my stop. For instance, the ATR I pay attention to closely is the 5-minute ATR. Why? Because I'm typically holding my trades anywhere from the majority of my positions, anywhere from 1 minute to 5 minutes. I can go beyond that, but a majority of my positions, probably 70 to 80% of my positions, I'm only holding for 1 to 5 minutes. So I need to know what the average true range is for 5 minutes, right? Because that allows me to adjust my stop to the ATR. If, in this case, the ATR, this is US 500 by the way, if the ATR is 8.91 points, if I have a 50-cent stop, I'm not giving myself enough room to be right. So I at least like to be anywhere between 35 to 50% of that ATR. As far as my stop, I have to be able to swallow that, right? So what I mean by that in this case, if you're trading US 500, right, which is equivalent basically to, it's a CFD equivalent to a ES, right? If you're trading US 500, that 5-minute ATR is 8.9 points. So more than likely, you're going to have your stop. You're going to have a stop of at least 4 points. Or you can't withstand any moves in either direction. You're not giving yourself the best opportunity to be right, because you're going to get stopped out fairly quickly unless the move takes place very fast. So the ATR, I use the ATR in a way to kind of measure my stop, get a feel for the speed at which the candles are moving, get a feel for the volatility, right? That's what kind of tells me, because sometimes when we're looking at the candles, we forget how much of a large move we're making, or how little of a large move, or how little of a large move we're making. So sometimes it might look like we're moving, but we're not. So don't get deceived by the candles and use the ATR. So that's a great indicator I also use. Another indicator, right? And also the ATR, you can use it on the daily. So say for instance, the daily ATR is X. If we move the daily ATR, more than likely in most cases, we've hit exhaustion. There are cases where we continue to push past that daily ATR, but it's more likely, hey, we hit that range. That's the average true range, right? So it's cool because you can adjust it to whatever desired time frame you want to use. So ATR is really good. Outside of that, what do I use? VWAP, of course, we talked about that. Multi-time frame high lows, days of the week. This is, but I don't use too many, and also I use sector performance. Sometimes I throw that on the chart. Yeah, this one right here. Right, so when I have this one on the chart, let's put this in the center. This is also cool. If you don't want to be looking at a bunch of different charts, right, you want to get a feel for it, what you can do with this indicator is you can actually change the names and pay attention to the ones you want to pay attention to. So for example, we know that SPY is mainly composed of Apple, right, Nvidia, Microsoft, Amazon, okay, Google, Meta, Berkshire is also in there, but it's primarily concentrated into these names. And if you want to add some other names you want to pay attention to, you can add it to the chart, right, and adjust it to the time frame. So for instance, if you want to get a feel for that first hour, what has strength, what's moving, you can even adjust it to different sectors. You can adjust it to whatever you like. You can get a gauge of the overall market without flipping through a bunch of charts, right? So right here you can see I'm looking at Amazon, Nvidia, Apple. So what I typically do is I look at the top 5 in S&P, and I look at the primary sectors that S&P is composed of. We know S&P is primarily composed of tech, financials, healthcare, and XLY, consumer discretionary, right? So those are the primary sectors that are heavily weighing SPY. So if you do that, you have a creative way of paying attention to SPY, also paying attention to SPY's chart as well. So outside of that, those are the only indicators I use, guys. I don't use anything else. Sometimes you can RSI, but RSI is hit or miss. I try to keep it to a minimum, and when we're diverging, I kind of feel it when we're diverging. I can kind of feel the divergence based on the price action and based on the speed at which we make the lows. So that's pretty much all the indicators I use. I try to keep it simple, but the primary thing the system is based on is price action, key levels. Everything else is secondary, right? Everything else is just support, right? To support it and give it an extra layer of confirmation. So very unlikely for me to just plainly use a moving average crossover to make an entry, right? That's not my preferred style. Does that style work? Absolutely. You can make anything work, but that's not my desire. That's not my my edge, right? Mine is the key levels, price action, and identifying the trend. And once you identify the trend, see if you can catch the trend early, or see if you can catch the second leg of that trend. So again, those are the primary indicators I use. Some other ones I can think of that I used in the past. I've used Stochastics RSI, MACD, but those are too slow for me, right? I already know what's going on by the time those things cross over, right? So if you have any questions, let me know. But if not, that's pretty much all I use, and try to keep it as simple as possible. Preferably, I even like my chart to be clean. Sometimes it gets a little messy with the levels, like you can see here. So coming into the day, this is what I'm looking at, guys. This is in my perfect world, this is my chart. All right, this is my chart. I need to know where all these levels are. Because this is where I'm making my decisions. I'm putting money behind these decisions. Right? It's very difficult for me to put money just behind the moving average. So if the moving average corresponds with one of these levels, extra layer of confirmation, right? If it doesn't, but that there's price action and I'm paying attention to the VIX at that key level, I can take the key level alone, right? Rather than just the moving average on its own. So again, hopefully you found that helpful. If you do see this sometime in the future, message me in the Discord, let me know. If you have any other indicators you want me to cover, I'll do my best to cover it. And on Friday and last week, I was talking about the difference between your indicator readings based on intraday without the pre-market and post-market, and intraday with the pre-market, pre-market, post-market, and intraday on, if that makes sense. So I can give you a quick example of that. Okay, if we look at the VWAP here. It's at 29.74. This is not including post-market and pre-market. So 529.74. If we look at extended hours, 529.66. Right? There's about a 10-cent difference. Sometimes that widens, sometimes that gets tightens up. And I'll give you another example here. The moving averages, they completely say something different. If you get a chance to use the moving averages on one chart, the same ticker, use the moving averages on one chart with the intraday and post market, and on the same ticker, turn off the intraday, post market, pre market, and see what those moving average readings tell you, right? So if I block out all these drawings, okay, so I just have the moving averages. Okay, you can kind of see what took place. This is Friday. So right off the open, basically at let's just say 9:42, all the moving averages were corresponding. The 9 was above the 20 and the 50. 9:42. Okay, now if we throw extended hours. Right, you can kind of see we're under the VWAP. We're still under the 200. Right, so basically they cross over 9:45. Right, again, the times vary. Sometimes they line up a little closer than other times. Right, but again, there has to be the same for me. It has to be the same for me to rely on it consistently. And that's why I love the key levels, because the key levels are the key levels. They're going to be the same to the penny. So we need accuracy. We need to know exactly what the levels are. We can't be off by 1 cent or 2 cents or 10 cents. We can't have too much wiggle room or room for error, right? So again, that's pretty much it, guys. Let me know if you have any questions. If not, we'll end it here. If you have any other questions regarding the chat or anything else that took place last week, I can address it here. And hopefully you guys are making progress as you continue to be in the Discord, and let me know if anything else I can do to make your time a little better. Okay? Any questions? Okay, no questions. So we'll end it here, guys. Thank you for tuning in. We'll see you guys on Monday. Pre-market game plan will be there. And have a great rest of your weekend, and we'll see what next week has in store for us. God bless.